Hey guys, Jack Gleason with Startup Trading, and this video we're going to be talking about trend, how to define trend, what different types of trend, the 5-minute trend specifically, and the 30-minute trend we're going to be going over here. There's something we refer to in the room, is a term that Perry coined, and it's called one-time framing. And what one-time framing is, and it exists on 3 different time frames that at least I pay attention to, and that is the daily, the 30-minute, and the 5-minute chart. And one time framing is simply going on looking at one time frame. So in this case, we're looking at the daily. We're trending on that one time frame, and the way we determine if we're trending or not is on the upside we're making just higher lows, not necessarily higher highs, but higher lows, and on the downside we're making lower highs. So if you look at the rally that began in October, late October of 2023, we have our first green day on the 27th. Okay, that begins the potential one time frame. We go higher the next day. We've officially begun trending on the daily time frame just for 2 days. And then the third day, you can see we again have a higher low. So higher low than the previous day, higher low than the previous day, day 2, higher low than the previous day, day 3. Here's day 4, day 5, day 6, day 7, day 8, and even on day 9 we make a higher low. So we continue to trend. That is 9 days up of straight trending, and then finally day 10 we end up breaking down. Then we just break down for 1 day. You got to think about it. We've been trending up for 9 days. We for the first time take out a previous daily low on the 10th day. This is so important for framing the context of where we're going and not getting caught on the wrong side of the trade. We instantly begin trending back higher again. Day 1, day 2, day 3, we trend higher for 4 days, and then we break down, and then we end up in a consolidation for about 2 weeks. We begin another trend up in early December, day 1, or this would be considered day 1 because this one actually takes out the prior day low, but day 1, gap up day 2, day 3, day 4, day 5, day 6, 7, 8, and then on the 9th day we break it down, and then we begin it up here. Day 1, day 2, day 3, day 4, day 5, and then here this is the opposite side, which I've been going over, trend down. So on this way up, this is day 1. We take out the prior day's high. We have a higher low, higher low, higher low, higher low. We're going into the holiday session at the end of the year, and then we make a new daily low. So this actually begins a trend down on the daily. Day 1, day 2, day 3, day 4, day 5. It's Sunday, so we very well, as long as we stay below this high here from Friday, on Monday we're going to have day 6. So you can see staying on this side of the trend. It's so important when you're framing every single day. And that's actually why I've decided to make the first word of this course trend, because the higher time frame trend is going to be the biggest determiner of whether or not you're on the right side of the trades that are running to targets. Now, you can always counter trend trade every single move, but if you're counter trend trading what is a major trend, you're not giving yourself the opportunity to be in the trades that are going to be multiple winners, that they're going to be 3x your risk, 4x your risk, maybe even 10 times the risk you put on the trade. So if you're getting in a trade with a 30-point stop, we're probably only going to go 300 points in the direction of the way that the daily trend is. So, if you look at this example up, there's plenty of entries that ran 300 points. Okay, if you're just trailing that prior day low, so you need to be aware of this at all time when you come to your desk every single day, no matter the market you're trading. Look at that daily trend. Are we one time framing down? One time framing is going to present the best opportunities for trends. That is multiple days, consecutive days, trading in the same direction. The path of least resistance is on that one time framing trend. So that is what exists here on the daily chart. Now, you can also break this down to a 30-minute time frame. So I'm going to go down to a 30-minute time frame here. When we begin a trend down or up, and you trail the 30-minute bars, that's going to help you stay in the trade long. So if you look at some of the biggest trends down here, one specifically that began Tuesday in the overnight session, all you do, we begin the trend down here, you take out a prior low, 1 bar, 2 bar, 3, 4, 5, 6, and then 7, still a lower high, 8, 9, and it wasn't until the 10th bar that we actually reversed the trend. Once again, breaking down 1, 2, 3, and then the 3rd bar up, high. Here again, 1, 2, still lower, 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 all the way into the almost into the close, and then we reverse higher. Paying attention to and just trailing that bar allows you to stay in the trade. And what you're doing is you're trailing the previous 30-minute high. Just keeping in mind that you really shouldn't let the market trade back against it, because like you see in this example, you can squeeze really, really hard. When that 30-minute bar closes, like here at 10:30, you do not let that trade move back against that high, because that is what's going to get the squeeze. Same thing here. You can see if you were to trade every one of these moves down, and then when that 30-minute bar closes, what you're doing is you're moving your stop down above the high of that candle. So in this instance, you're moving your stop down, you're short, you're moving your stop down. You do not let the market move back against that high. Okay, here, this move down. You do not let the market, once that 30-minute bar closes, move it back against that high. Same thing down here. Once we close that bar, do not let the market or your position, I mean, of course the market's going to do what it's going to do, but don't let your position, if you're short, move back against that high, because you're giving up, you're not capturing the profit. You stayed patient, you stayed short, but you don't want to stick around for too long. You have to realize when you're wrong. There will always be a counter trend trade. You don't have to trade that counter trend trade, but you don't want to stay in it when you're short a position. So just keep that in mind. You always want to be paying attention to that one time framing on the 30-minute. This, I'm going to go back a few weeks so I can find like an up move. This one time framing works really, really well on days that we have a trend all day. So here, this isn't all day, but you can see once again, this is the first bar that takes out that previous bar's low. So maybe there's a setup on the 5-minute chart, the next bar down, and then this bar down. You don't know how far the market's going to go. You're just kind of giving it that time to play out. We end up trading lower again, 30 minutes. Move your stop down above the previous bar's high. Move your stop down above the previous bar's high. Move your stop down above the previous bar's high, and then into the close you end up getting stopped out. But you're able to capture all of this move by just paying attention to that one time framing. And also on the opposite side of things, if we are aggressively selling off like this, and maybe you're not short, but you're not wanting to get long, okay, or if you are getting long, you very need to be aware that we are counter trend trading. If we are crashing, now this is 177 point move, which is absurd, but if you're against that, if you're looking for a trend long or a buy setup, you are absolutely stacking the odds against you. You have to wait until we take out that previous bar's high. So if you find yourself itching to get itching to get short, or itching to get long in the case of a short, you need to just trail that out, back out to a 30-minute time frame, and then mark these bars down. Don't even consider going long until we break above a previous bar high. And when we do that, then you can make the decision whether or not you think the best setup is to the long side, which it might be. But while that momentum is there, that one time framing down, that is so important to avoid being on the wrong side of a one time frame trend. Catch you guys in the next one.